Hello and welcome to Core Finance. I'm joined by Alessio Rastani, who is the founder and CEO of leadingtrader.com. Alessio, we're going to talk about common mistakes that some professional traders and some retail traders, if not all, may make along the line.
I think the title of this video should be My Mistake and How You Can Learn From It, because I actually made this mistake myself recently. And you know what, I'm very happy to talk about my mistakes because I use it as an opportunity to actually learn from it and make sure I don't make mistakes again. And I want everyone else to learn from this too. One of the things that happened last month, and I made this mistake with these two markets, and this could apply to anything, so it doesn't have to be just these two, it can be any market. I was looking to get long on oil stocks and German DAX. I was eyeing these two markets with attention to get long on these two. The only thing is that when the trigger confirmation occurred for me, and again, one of the confirmation signals I look for is something we call cycle of power. And when that goes when that signal goes from red to green, I get essentially it's a confirmation signal for me to get long. And what happened was, what I said to myself, perhaps rather foolishly, was I wanted to wait for a pullback to the averages, like the 21 average, before getting long, before buying into the market. And as you can see, there was no pullback because at the time of the trigger, and just to give people here some opinion, some context as to why I was waiting for a pullback. One of the things there are two things I stand by. One is I don't like to chase a market. I've long learned, don't chase a market. We know this, because it's a bad idea. Number two, September, which was when this trade occurred, September has usually been a weak month. So I thought, logically, you know what, there's got to be a pullback or at least some weakness in September. That gave us a better entry price. So when I say I wanted to wait for a pullback, the reason behind it is it improves our risk return. Get a slightly better entry and therefore better, higher reward. But guess what? The market doesn't really care about any of that. The market doesn't care about your rules or your strategy or what you want to do. And we can see what happened. This is what I call when the market says to you, see ya, I'm off. So essentially it didn't do any kind of, it didn't come to the levels for us to get filled. And it went off. So here's what I wanted, actually let me just show you another one example. If we go to the next chart. So there it is, here's a perfect example. This is on the DAX back about in December. Notice the DAX, we had a confirmation trigger there and a cycle of power. At the first one, there was a pullback. Came back to the 21 EMA, came back to the averages, gave us a nice entry. To look at the second one, we had another entry point, but this time said, see ya, I'm off, and didn't look back. So what you need to do, and I would advise, here's what I would suggest to folks who are looking to trade markets and watching this right now, is that you need to be flexible about your expectations. And this is actually in a famous book by Mark Douglas called Trading in the Zone, a great book. I highly recommend everyone to read it. Mark Douglas says there are two things you need to abide by. Be rigid with your rules, be flexible with your expectations. So it doesn't mean that we're going to break our rules here. So we just go back to that chart. What it means is this. At the first trigger, when you get a trigger confirmation signal for you to get in, so when the market's telling you, when all your strategy and your tools are telling you, get in, buy now, or short now, whatever, what you need to do is, if you're afraid of the market retracing against you, what you could do is get in with a small entry. So start with a small position size, scale in other words, get in with a 1/2 or 1/3, whatever you feel comfortable with. And then add the remainder at a pullback. Okay, so 1/2, or 1/3, 2/3, whatever you want. So in a situation like that, you would not miss the opportunity, at least, of getting some skin in the game. You want to have some skin in the game, so you don't miss great opportunities when they come along. It's a mistake I've made, and whenever I make a mistake, I want to make sure I don't repeat it. I don't want anyone else to repeat it either. All right, so that's what I got. That's what I want to talk about, and I want to ask folks, what mistakes have you made and how have you learned from them? Please send us your comments below this video. I'd love to read them, and would be great. But
as a trader, you have to understand that you can't get everything right. It's not going to be a 100% record. If you look at a hedge fund, they don't expect every trade to be a winning trade or to have the right entry point and exit points.
And it's a personality thing. one of my biggest weaknesses personally, maybe it's the same with you, most people watching this, is I'm a bit of a perfectionist. And perfectionism is great in other professions, like if you're a lawyer, if you're an airplane pilot, yeah, sure, you want to get things right. You don't want to make mistakes. But when it comes to trade analysis, market analysis, and trading, honestly, perfectionism is the lowest standard because you're most likely going to make mistakes and the only thing you should be perfect about is executing your strategy and your rules. Don't break your rules. Be a perfectionist when it comes to execution of your rules. Yes. But don't become a perfectionist about where the market you think is going to come to, because guess what? The market can surprise you in ways you don't know.
Understood. Well, on that note, viewers as well as Alessio intimated, please comment with any trading successes or mistakes and how you've learned from them. But in the meantime, Alessio, thank you very much for joining us today.